When this CPI data was published on Thursday, then the news channels and news websites, they started to publish this story that now the inflation has further cooled down. This means that the stock market will go bullish. Then stock market, it moved up, and then intraday it gave up heavily by almost 2%. So there were these two beautiful things that have happened on Thursday. Number one, it was a trap, a perfect trap. Number two, it hit 4527, exactly 4527, and gave up and came down. And in my previous S&P 500 technical analysis, I have mentioned this thing again and again, that 4527, no matter what, any reversal will be limited to 4527, and after hitting 4527, or in the best case scenario, the zone, it will come down, it will give up. Now the question is that if this was a trap, then was it predicted? Yes, it was. This was my pre-market update on Thursday to my Patreon community members, and I have analyzed the data, and I've clearly mentioned that in terms of the stock market, the US stock market, this data is not supportive of the bullish movement. However, I have just seen that some news channels are running the news that the data is supportive of the bullish movement and the markets are up. No, this is not true. Now comes the trap. So if the bull movement is true, as per the news channels and news forums, news websites, then the stock market or the S&P 500 must be able to beat 4527 and the zone itself, and it should trade above the zone. And if it fails, then the principle of the level and the zone will be applicable. And what is the principle? That if it remains below 4527, then it will go bearish. Also beware of the trap. Trap will come only if S&P 500 fails to clear 4525 and the zone, or fails to hit the level and the zone. That will be the trap. So what you have seen, an exact hit to 4527, the high of the candle was 4527, it failed, and intraday 2% bearish movement, downward movement. Anyways, when everyone was following the news and fell into the trap, my community members, they were very well aware of this, and they have made some good money on Thursday in this very heavy fall. So there was one more thing I mentioned, that there will be a bullish reversal, a good bullish reversal, because the K channel of the stochastic RSI is 0. That is why there will be a bullish reversal as early as on Monday. So we have seen a very good bullish reversal on Monday. On Monday, when this technical obligation was fulfilled, the next day onwards, bearish, okay, and this kind of movement. Anyways guys, so congratulations to all who have made some good money in the previous week, particularly on Thursday, and did not fall into the trap. Now guys, other than that, the S&P 500 moved as was anticipated, as was expected, and as was predicted in the previous S&P 500 technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you are looking for the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let me clear one more thing, that the recession, it was delayed, but it was not cancelled, right? It was delayed, but it was not cancelled. So whosoever is saying that the recession will not be there and recession, okay, it has been cancelled and the stock market will go bullish, no, that's not true. Now guys, I am going to discuss the agenda of this S&P 500 technical analysis. And the first point of the agenda is the S&P 500 technical analysis on the weekly chart. So weekly chart means the big picture, means the Hawkeye view, like what is happening in this the longer term. Longer term means in a month, or what is expected to happen in a month or in a quarter or so. Now there is the one important thing that has happened on the weekly chart, okay, that I will show you through the moving averages, that the closing of the S&P 500 was at 4464. Okay, this closing was below 4474. Now this 4474, this was our moving average, and because the closing is now below 4474 on the weekly chart, this means that more weakness will be seen. Okay, so I will show you, okay, how it is going to work, and what will be the next level. Okay, so weekly chart, again, this is the longer term. Then comes the second point of the agenda of this S&P 500 technical analysis, and the second point of the agenda is the S&P 500 technical analysis on the daily chart. See, this was the weekly chart. Weekly chart means the big picture, the Hawkeye view. This is the daily chart. So daily chart means that for like this a short term, for 1 week, for 2 weeks, okay, or for a maximum of 1 month, okay, what is expected to happen or what is happening, that is the daily chart. Then comes the third point of the agenda of this SP500 technical analysis, and the third point of the agenda is the CPI, PPI, rate hike, upcoming FOMC and recession. So the most important part is the rate hike. Before the CPI data was published, the Wall Street was expecting like only 3% chances were there. Only 3% chances were there that the Feds will raise the interest rates in the month of September. Okay, but now just after this, the CPI data was released. This 3% has increased to 25%. Okay, that now the Feds are going to raise the interest rates by 25 BPS in the month of September, right? So because the interest rates are already like 5.5%, okay, approximately 5.5%. This means that it is already at the levels, okay, that is expected to trigger, okay, a good recession. But now when this interest rate is further increased, in that case a recession, okay, it is like 100%. And again, recession was delayed, it was never cancelled, right? So the interest rates and the impact of these interest rates, upcoming rate hike, and then from 3% to 25% within a day. Okay, so this percentage probability, okay, it has increased that the Feds have raised the interest rate. Other than that, when the PPI data was published, then this 25% has increased to 35% next day. So as of now, 35% probability that the Feds are going to raise the interest rates in the month of September. Okay, from 3% to 35% within 2 days, right? So that I will discuss here. Now comes the last point of the agenda, that is the fourth point, and in this the last point of the agenda, I will discuss the S&P 500 probable movement from August 14th 2023, that is Monday, to August 18th 2023, that will be Friday. So what is going to happen in the S&P 500 from Monday to Friday? That so that thing I am going to discuss here. For example, last week I mentioned that on Monday, most likely on Monday, there will be a bullish candle, a bullish reversal. If that doesn't happen, then on Tuesday there will be very heavy chances that it will happen. Okay, and now any reversal will be limited to 4527. But if it fails, if it remains below, like this is the 4527, in that case 4497, okay, it will come into the picture. Then the stock market will remain below 4497. Okay, so all of this thing, like how the S&P 500 and the entire US stock market is going to behave in the coming week from Monday through Friday, that I'm going to discuss in this the last point of the agenda. Now guys, I would like to add a disclaimer to this S&P 500 technical analysis, that this SP500 technical analysis is not a financial advice in any form or in any manner. And because I do not know what you are going to trade into, how you are going to trade into, which is why whatever profits and losses you are going to see, these are all yours. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. Guys, now I'm going to discuss the first point of the agenda of this S&P 500 technical analysis. And this is the weekly chart. Let me write it down, weekly chart. So the first point of the agenda is the SP500 technical analysis on the weekly chart. Okay, so weekly chart means the one candle represents 1 week. Okay, not 1 day or 1 hour. One candle means 1 week. Now let's first analyze the candle itself. Now if you look into this, the candle, it's a bearish candle. Okay, now it's not a heavy bearish candle, but it's a normal bearish candle. But the most important part of the candle is that the closing of the candle is below this, the moving average. Okay, so the moving average was at 4474. Okay, 4473, 4474. Okay, and the closing of the S&P 500 was 4464. Okay, so what does this mean? This means that there is weakness in the S&P 500 because it failed to sustain above 447473. Okay, that was the requirement. Okay, means if the S&P 500 would have closed above 4474 or 73, then definitely in that case we would have expect, okay, some kind of sustained movement, okay, or a reversal or so. Now in terms of the numbers, okay, what does this candle signify? So yesterday in my final update to my Patreon community members, okay, I mentioned that a closing above 4475 and closing below 4474. So if the S&P 500 closes, so if the SP500 closes below 4474, that this means that now 4425 20 will be in the picture next week. Okay, so this means that now 442520, okay, it is in the picture, right? So means you can say that it is under this kind of obligation, not through the technicals, okay, but through the levels. It is under the obligation to come and to hit and respect and to means this the 442520, and thereafter, okay, and thereafter it is free to go bullish or bearish. Okay, now guys, once again remember this the condition. Okay, and what is the condition? The S&P 500 is not absolute bearish, because the condition which defines bearish movement must see a bearish crossover in the moving averages. So there must come a crossover in the moving averages. I'm not talking about the weekly chart. Weekly chart, okay, the crossover may happen like after 1, 2 or 3 weeks. Okay, I'm talking about the daily chart. Okay, so I will show you this thing on the daily chart. So the crossover is still not there on the daily chart. Until and unless this a crossover, okay, it happens. So only and only if the crossover between the moving averages happens, then only we will say that yes, now this is the true bearish movement. So whatever you are seeing here, okay, it is just the bearish movement in the bullish trend. Still the bullish trend is there in the picture. It is not the true bearish movement. So that is why I'm calling it as a short bearish movement, but not an absolute or not a true bearish movement. Now guys, let's talk about the technical indicators on the weekly chart. So in terms of the technical indicators, so far moving averages, okay, Bollinger Bands and Ichimoku cloud all are bullish, means S&P 500 is bullish through all of these are technical indicators, also MACD. And yes, now the important part is the stochastic RSI. So stochastic RSI, okay, it is bearish. Only stochastic RSI is bearish. Okay. Other than that, the momentum is not as much as it used to be. Then the divergence is still good. It is heavy. Okay, and volatility is fine. Okay, it has come down. So this means that all of these are technical indicators. Okay, when I say all of these are technical indicators, so what is happening on the weekly chart is that the MACD is bullish, stochastic RSI is bearish. These two are cancelling the effect, okay, of each other. MACD wants to give a bullish movement to the S&P 500, but at the same time the stochastic RSI is giving the bearish movement. So this thing will be considered as neutral. So only moving averages, Bollinger Bands, okay, Ichimoku cloud, okay, they are giving this a bullish support. So this means that as of now on the weekly chart, S&P 500 is 75% bullish. 75% bullish. Okay, and if you notice that 2 weeks, a week ago, okay, yes, almost a week ago, a week or 2 weeks ago, it was absolute bullish, 100% bullish. Okay, but now it is only 75% bullish. Now as of now there is no point of concern. Okay, but if the MACD turns bearish, in that case there will be heavy fall, and in that case the true bearish movement will come into the picture. Okay, so that I will discuss more in this the next point of the agenda, that is the S&P 500 technical analysis on the daily chart, right? So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you are looking for these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, and also the stock market opportunities in the premium stocks, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this SP500 technical analysis, and this is the daily chart. Okay, D as in daily chart. And the second point of the agenda is the SP500 technical analysis on the daily chart. Okay, so let's see what the technical indicators are saying about the S&P 500 on the daily chart. And now here, okay, I will tell you the moving averages. Okay, that why I am saying that still, okay, there is no true bearish movement. Now in terms of the technical indicators, if you notice that only this the Ichimoku cloud, only Ichimoku cloud is supporting the bullish movement, and the moving averages are neutral. Simple. Otherwise all of the technical indicators are bearish. But the most important part is that the MACD is bearish, as well as the stochastic RSI is bearish. Okay, and because the MACD is bearish, stochastic RSI is bearish, And if you have subscribed to my YouTube channel for last many months, okay, or years, then you have seen particularly this thing, okay, happening, that whenever, and I have mentioned this thing, okay, many times, whenever MACD and the stochastic RSI are aligned in the same direction, in that case, that direction becomes the direction of the particular stock index or the stock market. Okay, here we are talking about the US stock market and the S&P 500, right? Now the MACD is bearish, okay, stochastic RSI is bearish. This means that this the bearish is the direction of the S&P 500, means there is this the bearish pressure in the S&P 500, right? Yes, one more thing, okay, that is there is that the stochastic RSI, it is trying to hit absolute zero, but it is still not zero, okay. And as of now, through the calculations, I cannot confirm that if it will be zero on Monday or not, okay. But yes, looks like that if it remains like bullish, okay, or a small bearish on Monday and maybe also on Tuesday, then in that case, okay, it can again become zero. Means the K channel will become zero, not the D channel. K channel will become zero. What happens when the K channel becomes zero? Then anytime, any day, okay, there will be a bullish reversal, okay. And this time looks like that the D channel will also become zero. D channel will also become zero. So that will be a perfect condition. K equal to 0, D equal to 0, perfect condition. So see, when the K is 0, in that case we see, okay, intermittent reversal, like one day, okay, it moved up and then it came down. But when K and D, okay, both become 0, in that case there comes, a brief change of trend, okay. So most likely in the next week, in the coming week, okay, I'm not sure whether it will happen on Tuesday or Wednesday or Thursday, okay, but whenever it happens, okay, then and if you're my Patreon community member, okay, then I will inform you in advance that see, this is happening today, okay, because now a trend change, okay, is expected, right? If this condition doesn't happen and only if K equal to 0 happens, then also, okay, I will tell you that see, we are expecting, okay, a bullish reversal. So that bullish reversal, whether that bullish reversal can be used to short sell or to buy put options or not, that also, okay, I will inform you through the pre-market update, okay, or through the final update. Anyway, so other than that, so all of the technical indicators, okay, divergence is fine, okay, and volatility is increasing, okay, and fine. So what it indicates is that through all of the technical indicators, what we can see is that the S&P 500 is definitely, okay, it is not bullish. On the daily chart, it is not bullish. On the weekly chart, it was 75% bullish. But on the daily chart, we will say that it is 70% bearish. 70% bearish, but not absolute bearish, okay. Now the condition that why I have, mentioned this thing particularly to my Patreon community members, okay, in advance. Let's see why it is still not bearish or not, it is still not, truly bearish. The reason is that if you notice, the moving averages, there was a clear fan out in the moving averages, bullish and bullish, okay, no doubt. Okay, it hit the saturation on this day particularly, okay, on 27th of July, it hit the saturation. I have informed you, okay, very well in advance that there is a saturation, there will be a fall, and there was a fall, okay. Now the moving averages, we have seen an early crossover in the moving averages, that yes, that confirms that there will be a bearish movement, and there was a bearish movement. However, the confirmed bearish movement and the true bearish movement will come when these moving averages will come into this pattern, okay. This was a bullish pattern, this moving average was at the top, this was then number 3, then number 4. When this sequence reverse, okay, when this becomes number 4, 3, 2, 1, when this happens, okay, or if, see, this might take some time, okay, a week or so to happen, but at least when there comes the crossover, that is, looks like that this crossover is about to happen. When this crossover happens, then that will trigger the true bearish movement, okay. And once that true bearish movement comes, in that case, every retrace will be an opportunity to sell. So if the situation in the US stock market and in the S&P 500 remains like this, okay, for next 2, 3 or 4 days, okay, then in next 2 to 4 days, okay, or by the end of next week, we can see a perfect crossover in the moving averages. This crossover will be happening or will be seen after last time it was there, after March, okay. So we have seen that after March, okay, or from the month of April onwards, okay, it has moved bullish. Okay, the entire US stock market, all of the indices, okay, they went bullish. But now when this crossover happens, okay, then this will be happening after like 3-4 months. Okay, then it will enter bearish. It will fulfill its bearish technical obligation. Okay, and then we will see what is going to happen, right? So whenever this crossover will happen, okay, and if you are my Patreon community member, okay, then I will inform you so that you know you can prepare in advance. And if you have not yet joined my Patreon community, then let me tell you that how you can join my Patreon community. So first of all, you need to understand that in my Patreon community, I give the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the S&P 500, Dow Jones and Nasdaq, the top 30 or top 40 premium companies. Now, in order to join my Patreon community, I have given the link in the description of the video and also in the comment section. When you follow that link, then you will see that this is my Patreon page. And on my Patreon page, there are the 3 tiers. So the first and the second tier, these are same, daily S&P 500 updates and analysis. This is for non-US Canada residents and this is for US and Canada residents. This is the third tier, that is market opportunities and daily updates, means the stock market opportunities in the premium stocks. However, this will be discontinued soon, and now the stock market opportunities are the part of the daily S&P 500 updates. So when you subscribe for the daily S&P 500 updates, then you will get the daily updates of the S&P 500, Dow Jones, and there's the entire US stock market from Monday through Friday, each and everything, as well as the stock market opportunities in the premium stocks. And guys, if you notice that many people have joined my Patreon community and they are getting these daily updates, the daily analysis of the S&P 500 and the entire US stock market from Monday through Friday, as well as the stock market opportunities in the premium stocks, minimum 5 to 10 every week. So guys, once again, if you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the third point of the agenda of this SP500 technical analysis. And the third point of the agenda is the CPI, inflation, PPI, and rate hike, FOMC, Federal Reserve, recession, etc. Okay. So see, the core part is the CPI. This is the most important part. Okay, CPI, we have headline inflation, and the core inflation. So the headline inflation, for the first time in 1 year, yes, after 1 year we have seen a bullish reversal in the headline inflation. Okay, so last month it was 3%, this time, okay, it rose to 3.2%, right? The Wall Street the Wall Street was expecting a further decline to 2.8%, but just before this the data was published, the Wall Street has changed its expectations from 2.8% to 3.3%. Because they also knew that 2.8% it will not be there. Okay, there will be something, so they have already revised this thing 3.3% in advance, right? Other than that, the core inflation, okay, it dropped from 4.8% to 4.7%, and this thing and that thing. Okay, so this clearly means that this whatever economic data was published, it was not supportive to the bullish movement, and that is going to result in a trap. Okay, and what will be the condition of the trap? 4527. Okay, anyways, we are talking about the CPI. So the CPI, the increase in this, or the reversal in the CPI. Okay, and yesterday we have seen the PPI. Okay, further it came as per the, so yesterday PPI, so there was very minute decline in the PPI data. Otherwise PPI has also confirmed that the economy is holding, economy is doing well, and there are no signs of the stress and nothing. Okay, this thing, and this also means that the inflation is going to hold, inflation is going to sustain, inflation will be there at these levels. Okay, and that was the reason that these analysts, okay, they have, so earlier there were only, okay, before the data was published, there were only 3% probability, that the Feds will raise in the next FOMC, Federal Open Market Committee meeting, in the next FOMC meeting, that the Feds will raise the interest rates by 25 BPS, and there was only 3% probability. 3% means nothing, right? But when the CPI data was published, this probability has increased from 3% to 25%. When the PPI data was published, then 25% to 35%. So within 2 days, the probability has increased from 3% to 35% that the Feds are going to raise the interest rates by 25 BPS one more time. Even though many might not, accept the fact that there will be no recession, but okay, let me tell you that why there will be a recession. 5.5% interest rates. Okay, so what does this mean, the 5.5% interest rate? Okay, if you are looking to buy a house, okay, let's just take an example. If you are looking to buy a house, okay, now this house, so if you have cash, perfect. If you have cash like $1 million, okay, or something like that, yes, you can buy a house. Okay, so there is no inflation, no recession for you. Okay, but if you do not have enough cash and if you still want to buy a house, then you will go to the bank, you will ask the bank to give you the loan. Now the loan, this is the loan. Now because the interest rates are very high, this means that the interest rates on the loans will be very high. This means you need to pay. Okay, these are monthly installments. Okay, higher monthly installments. Which means you need to pay a lot of interest, a lot of extra interest to the bank, right? So what you will do? Okay, you will say, okay, no problem. Okay, I will wait until the interest rates comes down. Okay, once the interest rates comes down, okay, then I will buy. Okay, similarly, okay, so this is about the retail users. Okay, but we always focus on the business users. So the business, businesses, small and medium businesses, even the big, large business, they also go to the bank, okay, and they also ask for the loans. But now the interest rates are so high that Google, Apple, Microsoft, this company, that company, all of the companies, they have fired the employees. Why they have fired the employees? For the cost cutting. Because they are also aware of this thing, that the economy is going to slow down, okay, and whatever they are selling, okay, their sales will drop. This means that the cost cutting, okay, is, and see, this is nothing new. Cost cutting happens, okay, whenever this kind of situation is seen, then the cost cutting happens, because the companies, they do not want to take this the heavy hit. Okay, that is why they fire the employees. So these the giants, the big companies, Apple, Microsoft, okay, all of the companies, they have fired the employees, and further they are going to fire more employees. Okay, because the loans are costlier and businesses are not sure that whether they will be able to justify this, the loan, means they will be able to repay this, there's a higher interest to the bank. So they are not opting for the loans, rather they are going for the cost cutting, okay, just normal loans. They are just trying to this thing. Okay, anyway, so this mess, you can say. Okay, this all is because of the higher interest rates, right? So the economy will come out of the recession only when the Feds go for the rate cuts, okay, and only when the interest rates comes below 5%, not just the rate cuts, but below 5%. Okay, that will happen in the Q1 or Q2 of 2025. Okay, and the impact of the rate cuts will be seen after 4 to 6 months. Okay, so this is the picture. Okay. Anyways, guys, so if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. Anyways, guys, there is this one more thing that recently I've uploaded. This is the options trading secret. Okay. So if you have not yet watched this video, options trading secret, okay, then you can watch the video. Okay. Anyways, guys, now I'm going to discuss the fourth point of the agenda of this S&P 500 technical analysis. And the fourth point of the agenda is the probable movement of the S&P 500 from August 14th, which is Monday, through August 18th, that will be Friday. So guys, first of all, you need to understand the candle. Okay, because of the, and not just this candle also. Okay, now this candle formed after this, the bearish candle. Okay, it has further confirmed that there will be more bearishness there, so which is why we have seen a gap down open. However, it was able to sustain, okay, and it was able to sustain our 4454. Okay, so yesterday on Friday, okay, the level was 4454, and this level came into the picture through the moving averages. Okay, and this level came into the picture through the moving averages. So again and again we have seen that it is sustaining our 4454. So yesterday S&P 500, it was reluctant to give up 4454 support, and at the same time it was reluctant to move to 4477. So it was clear that for the rest of the day, okay, it is expected to trade in between these the levels with just, okay, a little up down. Otherwise it will sustain our 4454, as simple as that. Okay, So 4454, but it closed in a condition that it formed a hollow red candle. Okay, what is this, the hollow red candle? It is supportive of the bullish movement. Okay, what does this mean? This means that on Monday we can expect that the S&P 500 will not give up, that the S&P 500 will not give up easily. Okay, rather what it will do, it will try to sustain, still it will try to sustain above 4454 or 4455. Okay, these levels will change, okay, as per the moving averages. So I will update you through this, the first update, okay, or there's a second update once the 4 hourly candle forms. Okay, that means what will be the new level here. Okay, so it will try to give, okay, a bullish movement. Okay, however, because of the bearishness caused by these two candles, okay, this bearishness will not allow any heavy movement in the bull direction. Means there will be, you know, some bullish movement, but it will not be heavy, right? So the reason is these candles and this candle. Okay, so this particular thing, this allows a little or normal, very normal or very nominal bullish movement, but that will be limited to what? Again, limited to 4477. Any bullish movement as of now will be limited to 4477. After 4477 we have 4497. Okay, in between 4497 and 4477 we have, you know, one more level. Okay, so that level is again caused by the moving average. Okay, and but again that will change. So I will confirm, okay, once the stock market opens, once the S&P 500 comes into the session. So I will update you, because that level is very important. Okay, because even if the S&P 500 is able to breach 4477, S&P 500 will not be able to move beyond that level. Okay, so again that will be through the moving average. So now, and but at most to 4497, because now it was rejected by 4527. Remember guys, 4527 is the condition, it is a barrier, between the bulls. This side is bullish, this side is bearish. Okay, this is not about the long term, short term. Okay, this is just about the bulls and bears. Okay, so as long as it is trading below 4527, it will remain bearish. And as soon as there's the crossover happens in the moving averages, let's see, okay, when it happens, Tuesday, Wednesday or Thursday. Okay, again, okay, I will update you through the pre-market update or through the final update, okay, when this crossover happens, so that, you know, you can make appropriate changes to your strategies. So as of now, I cannot confirm whether there will be a gap up open on Monday or gap down open. Okay, but this thing is clear that S&P 500 will try to give a little bullish movement, a little or normal bullish movement. That bullish movement will be limited to 4477, and then this is the moving average that will be known only, you know, Monday. Okay, when the S&P 500 comes into the session, and then 4497. Okay, at most 4497. So 4497, 4477, and this level, this particular level, most important one. Okay, so it will be limited, and then again, okay, we are anticipating a reversal, right? This is clear. Now on the weekly chart, we have seen that because the S&P 500 has closed below 4474 or 4473, this means that now it is it is under obligation, not through the technicals but through the levels, to come and to hit 4425 level. This is 4425. This is 4425. So it is not exactly 4425. Okay, it is like 4425, 4420. 4420, 4425. Okay, approximately. Okay, this is the level. So it is under, okay, there is the obligation to come down, okay, to these levels. Now a reversal that we are talking about, that reversal will come. Technically that reversal will come once it comes down to 4425, 4420 or so. Okay, and at the same time, if the stochastic RSI, okay, it is also trading at 00. Okay, if both K and D are 00, if both K and D are 00, at the same time it has hit the 4420, 4425, in that case a good reversal that will be there for our next, for a few days. Okay, not just for one day, but for a few days, 2, 3, 4, 5 days, or for a week. Okay, that kind of reversal. Now if there comes a reversal even before hitting this thing, in that case that reversal will be short lived. Rather there will be a bearish movement. It will come to 4420, 4425, it will reverse for a day or so, and then it will again give up. Okay, now after 4425 we have one more, this the level in between these, that is again through the confluence zone, but that calculated level is the 4396. Okay, between 4425 4396 there is one more level. Okay, so I need to check that level, but that is through the monthly moving average. Okay, so if it fails to reverse from 442025, then it can reverse from that level. Otherwise, it will come to 4396 and it will reverse through from 4396. Now, the important part is, if the S&P 500, see, if there comes more selling and selling, no problem. The S&P 500 can, okay, it can come down. It can come down to like what? It can come down to this is Monday, not Monday, that is not possible. This will be Tuesday, this will be Wednesday, Tuesday, Wednesday, yes, 4371. Okay, 4371. Now 4371 is the level, okay, especially for the next week, that S&P 500 is expected to sustain above 4371. Okay, it is not expected to breach below this, the 4371, because it will then enter into the Ichimoku cloud. Okay, at first it will resist and it will be reluctant to enter into the Ichimoku cloud. Okay, and what we know about the Ichimoku cloud, that the boundaries of the Ichimoku clouds are themselves, okay, they act as the support and resistance levels, as simple as that. It will be reluctant to enter into the Ichimoku cloud, and because it will be reluctant, this means that we can see a reversal from here. But if there comes perfect condition, this is KNDR 00. It is trading around these the levels, S&P 500. It has hit this the level. Okay, then yes, for a week, at least for 4-5 days, there will be a reversal, a bullish reversal that will be there. Okay, but this will be known only when the S&P 500 and the entire US stock market comes into the session. Okay, but this is not expected to happen on Sunday, because on Monday, because if it happens on Monday, then the level will be 4355. Okay, 4355 will definitely come into the picture. 4355 will definitely come into the picture. Okay, but not on Monday. It is not expected to be seen on Monday. Okay, from Tuesday, okay, not even Tuesday. Okay, Wednesday onwards, 4355 can come into the picture, provided that the S&P 500 has entered into the cloud. It is trading inside the cloud. It has closed inside the cloud. Okay, that condition. Okay, so now what we have, what we know is that next week maximum is 4497. Okay, so next week the maximum we are anticipating is 4497. Okay, see, technically technically up to 4497 is allowed. Okay, but beyond 4497 it is technically not allowed. It will be technically allowed only if the S&P 500 sustains on Monday and Tuesday. Sustains above 447 on Monday and Tuesday, and this is the moving average that is there in between 4477 and in between 4497. Okay, if it sustains, okay, above 4477 and around this the moving average, in that case, yes, the technicals will support a movement beyond 4497. Any movement beyond 4497 will be limited to 4527. Okay, again in between 4527 4597 there are these some other moving averages on the lower level charts. Okay, that will further restrict the movement. After 44 this is the 97. Okay, then we have 4425. Okay, so from 4497 to 4425. Okay, next week we are anticipating this okay movement. If it fails to sustain at 4425, then 4396, and beyond that we have 4371. So from 4497 to 4371, okay, this will be the maximum movement, okay, that we are anticipating in the next week. Otherwise the movement will remain in between 4497 and 4396, as simple as that. Okay, now see, this is where, okay, the movement is expected to be there, okay, means limited. But the most important part is about the reversal. That is the most important part, because if this reversal, see, remember, if there comes a reversal on Monday, if there forms if there comes a green candle, if there comes a green candle on Monday, if there comes a green candle on Monday, then this will help the stochastic RSI not to move to zero or move towards zero, rather to increase. Rather the stochastic RSI K and D channel, okay, they will reverse, and they will means the value of the K and D channel will increase. This increase will not help bulls. No, this increase in the K channel and the D channel will help the bears. Why it will help the bears? Because now there come more fall, very heavy fall without saturating the K and D, right? Means there will be more room by giving a bullish candle on Monday or on Tuesday, or on Monday and Tuesday. Giving a bullish candle on Monday and Tuesday will create more room in the bearish side. Remember this point. It is not supporting the bullish movement, it is supporting the bearish movement. This will create more room in the bearish side. Means we can see more fall, heavy fall. Okay, earlier it was we were expecting it to 4425. This time it can even come down to 4371, 4355. That much room will be created in this bearish side. Okay, so the best thing for the bulls, the best part will be if there comes more bearish movement on Monday, Tuesday and Wednesday or so, and when this saturates the K and the D channels, at the same time it hit the 4425 or the boundary of the Ichimoku, that will be a perfect condition for a reversal. A reversal that will not be there for 1 or 2 days. No, it will be there for 2, 3, 5 days. Means you can say like for a week the reversal, bullish candles will be there, right? That kind of reversal. But if there comes this thing like a bull candle on Monday, okay, or on Tuesday, or on both of these 2 days, then a fall up to 4355 is definitely okay. We can it means it cannot be denied that the fall will not be there. Then there will be very heavy fall. Means I'm not saying 100%, but there is very heavy probability, because in that case the technicals will create more room in the bearish side. But in the bullish side, it is restricted. It is restricted to 4497 and 4527, as simple as that. But the bearish side is open. So whatever is going to happen, whatever is happening, okay, these are technicals, a change in the moving averages and all, whether there will be a reversal or not. So that I will update you through this, the pre-market update, okay, and the subsequent updates, or this the final update. And if you have not yet joined my Patreon community, then you can join my Patreon community for the daily updates, the daily analysis of the S&P 500 and the entire US stock market. I've given the link in the description of the video and also in the comment section. And other than that, guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have liked this video, then hit like. And also if you have any questions that you want to ask, or if you have any concerns that you want to share, then please feel free to share your concerns, or please feel free to ask your questions through the comment section. So guys, this was my S&P 500 technical analysis for the next week, that is from August 14th 2023, which is Monday, through August 18th 2023, that will be Friday.